In times of volatility, investors tend to seek safer assets, and the Swiss franc has historically been one of them. The currency has been strengthening of late. It's at an all-time high against the euro, and bank deposits are also playing a part. Investors have been switching accounts out of dollars and into the Swissy. Figures show that the share of Swiss bank assets denominated in francs rose to almost 50% 2 months ago, from as low as 32% 4 years ago. The share of assets in euro hasn't moved much, which proves the point that it's mostly a move out of the dollar. In the past 5 years, the Swiss franc has gained almost 30% against a basket of major currencies. These figures are based on calculations by Nomura, based on official data, and Nomura's head of European Forex, Geoff Kendrick, is here to talk more about them. Geoff, good morning to you. Am I right in perhaps assuming today, this Friday morning, that there's really only one safe currency around in the world these days, one safe haven?
Certainly. I mean, investors do talk and market participants do talk about the dollar and the yen being sort of safe haven type currencies, but really when bad things happen, those currencies tend to go up because the market has been short of them going into those bad news events. And it's really only the Swiss franc, at least within the major currencies, that is providing that long-term safe haven status. And as a result, Swiss tends to go up when bad things happen. And in the last couple of years, it's been going up no matter what, as Swiss banks have been downsizing and changing their asset mix, etc.
And what's quite interesting about this, it's not necessarily switching out of currencies across the board. It's mainly the dollar.
Absolutely. Most of the flows that we've done quite a lot of analysis on have shown that Swiss banks have been switching assets out of the dollar, as you've just mentioned, and into Swiss, partly out of euros as well, but that Swiss franc proportion has gone up from 32% to 49% now. Most investors and most market participants have missed this trend. So we had 2009, the Swiss banks were de-levering. That was the first stage of Swiss franc buying. And then in 2010 and also 2011 so far, that change in mix of assets has been driving the Swiss much stronger. At the end of the day, FX is a flow game. Most people say, well, interest rates are low, yield spreads say Euro-Swiss should be 145, 150. But in terms of the massive banking sector in Switzerland, which is way larger than the economy compared to most, it's really those flows that you need to be focusing on, and I don't see them changing anytime soon.
Oh, well, that's the key question I was going to ask you next. I mean, this could be just a little bit of a bubble that could be due for a correction anytime soon, but you seem to be suggesting that you don't think that's going to happen. How far can the Swiss franc go?
Well, yesterday we sent out an updated forecast for Euro-Swiss, and we see it holding around this 118 to 122, 123 range for the rest of this year. At some stage, these flows will change, and when they change, the market participants will probably be buying Euro-Swiss in size. But I see that more as a 2012 or maybe even 2013 story.
Are there any downsides to holding the Swiss franc?
Well, ironically, given that we're talking about the Swiss franc this morning, probably Euro-Swiss will go up today after the Greek news overnight. So we've been talking so far about those big structural flows, which are really Swiss bank flows. But there are other market participants, hedge funds and other investors out there will probably be selling Swiss today, given the slightly better Greek news from overnight. But if that saw Euro-Swiss bounce up to, say, a 121, 122, I'll be telling investors to be selling again and getting back into the Swissy. And
basically, looking at the global picture, you're looking at about 18 months ahead. What investors should be looking for on the longer term to maybe get out of the Swiss franc?
Yeah, over the very long term, you need to be watching those key flow indicators. Yeah, so you could sell Swiss now and think maybe 2 or 3 years down the track, but you'd be paying away premium if you did that via options, for example. So you need to be watching those key flows, and there's really only 3 of them. One is the total size of Swiss bank assets. That's very stable at the moment. The other is this mix of assets by currency that we've spoken about. If that were to turn away from the Swiss, or if the trade balance started to deteriorate significantly. Yesterday we saw another very good trade surplus.
It's remarkably resilient, isn't it? You've got the Swiss central bank saying, warning that the high value of the currency could actually eat into a profits, but it's not happening.
Absolutely. I mean, half of Swiss exports are watches and pharmaceuticals, etc., which are not price sensitive. The other half are genuine low-end manufacturers, and at some point they must be starting to feel the pain, and that's really what the S&B have been concerned about over the last 12 months or so. But so far, it's just not showing up in the numbers, and until it does, I'll keep telling investors to be buying the Swissy.
Geoff Kendrick, grateful to you. Thank you very much indeed for coming in
Thank you.
on Countdown today.